It's a new year, and as a Tesla investor, you may be concerned about what the year is going to be like for Tesla stock, and pretty much any other stock on the chart. And considering that the stock market is highly volatile, it's often uncertain what the future holds for a stock like Tesla. However, American investment management firm Morgan Stanley gives a sneak peek into what the future may hold for the car company, and according to the firm, this may be the year of opportunity for Tesla investors. You don't want to miss out on this, so don't forget to watch until the end to get all the details. Hi guys, welcome back to Tesla Tomorrow. Tesla's stock price recently went up off the charts, and the bounce came after the stock plunged 30.8% amid a 7-day losing streak, which created a deeply oversold condition, causing the stock to close at its lowest price since August 2020. Despite that bounce, Tesla shares still plunged 38.8% in December, putting the automaker on track to suffer the biggest monthly drop since they went public in 2010. However, Morgan Stanley analysis still believe that this may not be the end of Tesla's stock. In notes, the firm stated that a sell-off had created a buying opportunity for Tesla stock, and they also urged their clients to buy shares amid a significant pullback. Is this a year of opportunities for Tesla and its investors? Let's find out, but before we do, if you like this type of content, don't forget to like and subscribe and turn on notifications to keep up to date on everything going on with Tesla. Tesla shares recently charged higher, extending its bounce off a more than 2-year low. This was after Morgan Stanley made its recent note on its company's sell-off, a sharp one at that, which the firm believes has created an attractive opportunity to invest in the EV maker. Morgan Stanley analyst Adam Jonas said he believes the sell-off was done as a result of increasingly unfavorable supply versus demand dynamics in the EV market, and it was worsened by technical factors. In a recent note, Morgan Stanley reiterated his previous stance that 2023 is likely to be a reset year for the EV market, with supply is expected to exceed demand. They wrote, "We believe 2023 is shaping up to be a reset year for the EV market, where the last 2 years of demand exceeding supply will be substantially inverted to supply exceeding demand." Morgan Stanley analysts see an attractive entry point in Tesla as the stock continues to trade lower, although it reiterated an overweight rating on Tesla stock. It had previously cut its price target to $250 from its prior $330 price per share for a bear case scenario where Tesla is unable to meet up with the expected EV demands in the future. Morgan Stanley's Adam Jones believes that Tesla can actually thrive in the competitive EV market. He said that the players who are self-funded with demonstrated scale and relatively low costs throughout the supply chain like Tesla can be relative winners in the EV space. While speaking on Tesla's stock sell-off as an attractive price entry for investors, Jonas stated that between a worsening macro backdrop, record high unaffordability, and increasing competition, there are still hurdles to overcome. He added that his firm still believes that in the face of all these pressures, Tesla will widen its lead in the EV race, as it leverages its cost and scale advantages to further itself away from the competition. Morgan Stanley had previously named Tesla as one of its top picks for this year, after citing the car company's future growth opportunities. Despite Tesla's recent challenges with its stock valuation, the investment firm still sees Tesla's stock as an opportunity for growth in its value. Reports stated that Morgan Stanley's Tesla pick highlighted the firm's optimism about Tesla. At the time, not only did Morgan Stanley maintain its price target for Tesla at $330, counter to moves by Goldman Sachs, the firm also doubled down, stating that while 2023 may be seen as a challenging year for the EV market, categorically, it does believe that a gap is going to form between Tesla and its competition. Several Tesla EVs recently qualified for tax credit in the US, especially most of its Model 3 and Model Ys. The new $7,500 federal tax credit for electric vehicles in the US was set to come into effect on the 1st of January 2023. And while a lot of details were unclear, the biggest unknowns were majorly the requirements of battery material provenance, as well as component manufacturing. Recently, the US Treasury announced that it is delaying the guidelines regarding those requirements until March, and therefore they won't apply until then. But recent reports show that Tesla cars may be getting this credit. The major problem, however, may be that eligibility will only last a few months. According to the US Treasury Department, this is because limitations on new tax credits won't be put into force all at once, and that means that the new rules will temporarily be more generous, allowing higher tax credits on more electric vehicles for the first few months of the year. While it may seem that Morgan Stanley is quite optimistic about Tesla, it is good to note that the firm lowered its price target on Tesla stock from $250 to $330. And even in a bull case scenario, Even worse, the firm's recent bull case now stands at $440 per share from the previous price target of $500. At Morgan Stanley's bull case, Tesla's expected to trade at 18 times 2030 EBITDA and 3.7 times 2030 sales. And for the bear case, where the car company trades at 3.1 times 2030 EBITDA and a 0.6 times 2030 sales, the price per share now stands at $80 from the previous $150 target. Although several analysts do expect a huge turnaround for Tesla stock this year, there are still a number of factors that may hinder this change. And one of those is the perceived demand and production issues in China. Tesla recently suspended production in China amid rising COVID-19 cases. And according to reports, Tesla was already making plans to pause most of its work at Shanghai's Gigafactory in the last week of December. However, the move comes ahead of schedule that was already planned. Tesla's Gigafactory in Shanghai is the automaker's most important manufacturing hub, which produces two of its best-selling cars, the Model 3 and Model Y. And so this could significantly affect demands for a while and have Tesla grappling with elevated inventory levels at its second largest market, which has braced for a downturn. It could particularly affect local demand in this market, since less cars will probably be purchased in the coming months. Tesla could, however, bypass that issue if its Shanghai Gigafactory has been focusing on manufacturing cars for export instead of prioritizing the local market's demand. Although the car company gave no concrete reason behind the suspension, it had repeatedly cancelled the morning shift at the factory and told workers that they could start their break. It was earlier reported that Tesla planned to suspend production of the Model Y electric crossover at the Shanghai Gigafactory for quite some time. And so the production suspension could have been a part of the automaker's planned production cut of around 30% in December 2022. However, overall there is still a lot to expect from Tesla in this new year, and most of these will probably be positive. That's not to say that Tesla's stock success is guaranteed. It isn't, for Tesla or any other stock at that. Several Tesla bulls, market analysts, and even Elon Musk himself have all noted that the global economy is in for a very precarious situation currently, especially in the United States, as the FED continues to push interest rates higher to battle climbing inflation. At the same time, supply shortages may be getting worse as tensions between the US and China continue to build, leading to numerous tech suppliers like Tesla facing challenges in producing essential parts. But looking at Tesla's finances and the company's future, investors can get a better idea of the conditions and opportunity of the stock. Tesla's already got solid fundamentals, ranging from high earnings and profitability to low amounts of debt relative to competitors, as well as continuous growth in demand for all its products too. And considering the future production offerings from Tesla, more good news may be awaiting Tesla investors. One other opportunity for Tesla to become a disruptor within the automotive industry is with its semi-truck, which has already started to deliver. Likewise, the anticipated Cybertruck is finally coming to fruition and may be hitting the market anytime soon. Products such as these are potential boosters for Tesla stock and are also expected to boost sales significantly higher over the next few years. But what are your thoughts on Morgan Stanley's price target for Tesla? Let us know down below, and don't forget to tell us what your valuation of Tesla stock is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.